You are live. All right. There we go. Hold on a second. All right. What's going on, everybody? Here we go. Opening range breakout of gold here. Trying a little experiment today. I'm still editing that video for you guys from yesterday. It was rather long, and I got started a little late on it. So that new video, we use gold as the example, and I was showing you guys step by step how TrendCloud was giving us signals and indications as to what was going on. And I ended up getting into, let's see, I ended up getting into a gold trade yesterday. I believe on one of these TrendCloud signals here, but it's very interesting. I was researching the automated trading systems like Blue Edge Financial and Minotaur Trading, and what was the other one? NURP, NURP, NURP. I'm sure you guys have seen the software for these guys, and none of them use stop losses. It's very interesting, and I'm wondering if that's how it is with these big hedge funds as well, where they don't necessarily put a stop loss, but they use more of a drawdown, and they say, well, if we have more than a 5% drawdown, then we're going to stop the trade. And I think that is how the procedure is when using these automated trading systems. The automated trading systems are set up that way. So it's very interesting. It's interesting. It's an interesting concept. So, yeah. So I'm kind of experimenting with what that looks like, and I'm doing that on the micro account, where I'm leaving a drawdown expectation, right? But yeah, I have to do it manually because there's no way to really do that. There's really no way to perform that setup on TradingView. You would need some kind of special software to do that. So I thought, well, let me experiment and see what that looks like. So I'm kind of back testing that right now. And I will let you guys know what the results are. But we can see right here that we're breaking out of the opening range, right? And the opening range on the metals market is from opens up at 820, right? So opens up at 820, and then we've got this is a 5-minute chart, so we have 5, 10, 15 minutes go by, paints the line on here, and then paints the 2 lines on there for your 15-minute breakout. And so the idea is, if price breaks out to the upside and pulls back, we can take the retest on that. And hey, Frank, how's it going? Good morning. So that's very, very simple concept. 15-minute opening range. So here's the 15-minute opening range on gold, and you can see we broke out to the upside, and we are pulling back. And if we take TrendCloud off, looks like this, right? 5-minute opening range, looks like it's retesting, right? Pulling back in close to that opening range and retesting the TrendCloud. Now take a look over here. Look at what we ran into. This is how you use multiple time frames now. Look at how we broke out to the opening range. We broke out to the upside, and we don't have anything on the 5-minute chart here, right? But if you look at the 1-hour chart, look at what we've got. Let's make a line. This is the 50 simple moving average. Okay, that means it's the average of the last 50 candles. That's what that means. So take a look. Let's put a line right at the 50 simple moving average here, right as it touches right there. And you can see on the 5-minute chart, you can see how we went up to that moving average and now we're pulling back. Moving averages are levels of support and resistance, right? In this case, resistance. So a moving average is a level of support and resistance, which is mass psychology, right? This is mass psychology. How exactly does price bounce off of a moving average? How is that possible? Well, that's because there's millions of people looking at this, and the 50 simple moving averages is very popular. The other popular moving averages are the 100 and 200 simple moving average. And I only like to use those moving averages on the highest time frame, because the highest time frame is always more accurate than the lower time frames. It's always more accurate than the lower time frames. So I like to put those moving averages, specifically 100 and 200, on the highest time frame. The 50 simple moving average and the TrendCloud itself, which is made up of the 15 and the 34 exponential moving average. The exponential just means that the moving averages, it moves a little bit faster. I'm not sure what the exact equation is for that, but it is same thing. The past 15 candles, the average of the past 15 candles, the average of the past 34 candles. But I don't know what makes it exponential. Okay, coming back, hitting the opening range, retesting the opening range. We are sideways, right? We're sideways on the middle time frame, and we're up on the high time frame. And we've got momentum on our side on the high time frame, trying to break above positive 100 on that CCI, right? So the CCI indicator, that's a momentum indicator. It's a momentum indicator, and that tells us when we're above positive 100 that we have a strong uptrend. If it's below negative 100, it means we have a strong downtrend. And so, in order to jump back on this upward trend here on the high time frame, we want to see the shift in momentum, right? We want to. So if we start taking the retest of this, we don't have all of the indicators lined up yet. We have trend, right, on the high time frame, starting to cycle up, and momentum. We've got all three of those indicators. That's great. But what about the middle time frame? Well, it's still down. We have a downtrend and we still have downward momentum. So, so we've got some mixed signals here, and that would make this a bit more risky or aggressive. That's all that means. So the edge, creating an edge using your TrendCloud system simply means you look for this trend, cycle, and momentum all to be in the same direction. Then go to your middle time frame and look for trend, cycle, and momentum. Make sure all of that is going up. We only have the cycle on the middle time frame. But it's getting real close to breaking above, that that positive 100. And we know that there's a lot of news coming out that gold will be going to like $3,000 or something like that. So the idea is, how can we get into a gold trade here and stick with it? This is what it looks like on the 15-minute chart. So if you get good at this and you understand the news, right? Especially with gold, we don't expect the bottom to drop out of gold, just like we don't expect the bottom to drop out of Google or Amazon or Apple. So we're always looking to invest. We want to invest in gold, silver, precious metals. And we want to invest in stocks like Amazon, Apple, Google, the big stuff. A friend of mine called me the other day and said, "Hey, Chris, I have $10,000. What is the best way to invest $10,000?" And it was very easy. It's definitely not a trading mechanism. It is, although we do use that, right? We use that 1 hour chart to find the best times to invest in stocks, and it's on that crossover, right? It's on those crossovers on that 1 hour time frame. Okay. And there is no stop, right? There is no stop loss. It's an investment, right? So right here, so it looks like if we did that on gold, we'd be doing very well, right? Right here. Might want to consider doing that on the micro gold. Is looking at these right here. Looking at these 1 hour crossovers on gold to invest. Pulls back right here. What we did yesterday, let's go over to our micro account. What we did yesterday is we got in on a TrendCloud signal, a 5-minute TrendCloud signal. Let's go 5-minute. And I believe looks like it was the retest of this right here. Was it? I believe so. Somewhere in there. So yeah, pulled back, hit the opening range. So you see, if you try stuff, you're in the general area, right? But we would have done better if we waited for the pullback of the opening range here, right? I didn't close out of this yesterday, and so it made a little bit of money, and then pulled back really deep, and now we're trying to break back out to the upside here. So we're doing a little back testing experiment. And what I'm going to do is explore the drawdown. Going to explore the drawdown, do that a bunch of times, and see what kind of drawdown we're looking at with gold, so that if we do automate our system, when we automate our system, we'll be able to have an understanding of what the drawdown is, and we can set that drawdown parameter. Getting TrendCloud signals as well. ADR checkpoints are way, way above here. We got a long ways to go. Globex trap, 59%. It doesn't seem like it's going to run out anytime soon. So we will get a break above. We should get a break above the Globex, and we should continue that move. One of the most valuable pieces of information that that I've learned is the extended trend. How to identify an extended trend. Very, very valuable work. Very valuable stuff. Why is that? Well, as you know, there's there's 5 waves in an average trend. And take a look. TrendCloud will count it out for you. 1, 2, 3, 4, 5. Candles turn ice blue. And then what does an extended trend want to do? It wants to recalculate. It wants to regain its energy. And how does it do that? It has to close, right? It's got to close below the 50 simple moving average. And here's your 50 simple moving average right here. So it's got to close below that, recalculate, right? And then either continue the move up, which it did here for a little while, and then we just went sideways. Broke down. 1, 2, 3, 4, and started to go sideways and break back to the upside. So we're kind of we're in this sideways movement right now. But very easy to see. It's very easy to see because of our system, right? It's very easy to see because of our trading system. TrendCloud is going to be your price action mapping system from now on. And you'll find that you'll have a step-by-step guide on price action. And you'll be able to see the timing better. You'll be able to time this better for your entries. And it can be done. It can be done. It's difficult, but it can be done. And we're doing it, right? We're doing it right here. We're saying we're going to wait. We're going to wait for that, for those momentum and trend indicators to be going in the same direction. And we're just not quite there yet. Okay. Very nice. Starting to break out to the upside. So whether we got in last night or we got in right now, we were correct. We were correct. We were correct because we're using a very objective system, and a very visualized system, a system that is highly visual. And let's just see how this goes. So this purple line right here, this is what I want you guys to do when you're reading multiple time frames. Here's how you practice reading multiple time frames. This is how you practice. Go to your lowest time frame, whether it's 5-minute or 15-minute, put that up on the chart and start looking at where price moved from. And we can see we've got this area right here. Okay. So go back and say to yourself, well, why did price hit this area and go down? Well, go out to your middle time frame. Okay. Go out to your middle time frame and take a look. Here's the 1 hour chart. Let's take a look. You can clearly see right here, guys, take a look at this. You can clearly see that price was hitting the 50 simple moving average. Aha. So the 50 simple moving average, right? This line right here on the 1 hour chart, and I put a purple line right where that 50 simple moving average is. And you can see how price bounced off of it on the 1 hour chart. It's represented on your 15-minute chart looking like this. This is why it's bouncing off. But if you don't have the 1 hour 50 simple moving average on your 15-minute chart, you won't see it. So that's why you need to look at multiple time frames. That's why you need to look at multiple time frames. And you need a system that's going to assist you in doing that, because that's what's going to help you make informed decisions. Frank, I've got a local honey in this tea. It's infused with lavender. It is amazing. I'll bring some home. It's so good. Oh my God. Raw, unfiltered honey. Very good for you. All right, let's take a look at how our micro trade is doing. There we go. So, so even though we got into this last night, we're using a different technique as a experiment, right? We're experimenting with those stop losses here, and we're going to see if that really does work. So the drawdown here was rather significant. I mean, we have five contracts on here, right? We've got 5 contracts. Again, the better entry was here from today, right? The retest of the opening range. Look at that. Look how close we are getting to breaking above positive 100 here, right? And, you know, you can see, look at the stop loss. So this is 3%. That's 3% drawdown. Okay, that's a 3% drawdown. If we take the full, two, 4, 6, 8, almost a little more than 4% drawdown, right? Little more than 4% drawdown on that full swing. So again, this is an experiment, and we're seeing if let's see what happens here. We don't want take profit. Where's this going to go? Well, we want to see this break through and either max out here, double top, right? All right, the objective is to break past here. So why get out of the trade if we know in the long run this is going to go until, you know, even in a couple of weeks, right? What kind of drawdown will we experience if we just let this thing run? And that's what we're going to do with gold. We're going to let this just run. And we are going to, we're going to experiment and get some data from it. It's always good to extract data from your trading regime. It's all about data. If you get enough data, right, as a discretionary trader, we don't have any deep learning capabilities, right? We don't have any software that will do this for us, but we can take about 25 different trades. That's what Mark Douglas used to say. Do about 20 different trades and and see, experiment. Experiment and see. Okay. We've got the alert, right? We've got our alerts on right now. Come on, alerts, where are you? What the heck? There we go. TrendCloud trading triggers. Every time there is an up arrow on our 5-minute chart, we're going to get alerted to that. We will get alerted to that. Here we go, starting to break above, starting almost there. We need to get past that 1 hour 50 simple. TrendCloud signals forming on the high time frame. Okay. And I think we've got plenty of room to grow here. So essentially, what TrendCloud is an automated system, but you just have to take the trades manually. You can think of it that way. You can definitely think of it that way. Take a look at the full contract here. Full contract, 5-minute TrendCloud right in here. Pulling back into the TrendCloud. Uptrend, cycling up, momentum is up. Trying to break through, pulling back. Came back, hit that opening range. Maybe we can retest the opening range again. Let's try it. And we'll use the drawdown technique. Let's see what happens. All right, let's go take a look at copper. Whoa, what is all this? Okay. Start with the high time frame. Here's copper. Let's take a look at our moving averages here on copper. Look at how we went 5 waves. Candles turn ice blue because the trend is extended. Pulls back, didn't close below the 50, did not close below the 50 simple moving average, so it wasn't able to recalculate. Made a second attempt, right? Pulled right into, look where it pulled into. Pulled right into that market edge. Pulled right into that market edge and made a real nice move down all the way to the 100 simple moving average. Bounced off of that. Nice gap up here. Price goes sideways, candles turn from red to yellow to green. So right here, you can clearly see the transition, right? Here's the transition from blue to red, right? Blue, yellow transition candle giving you a heads up, right? Some people get real aggressive and they trade the transition candle. Goes down, retests the trend cloud and moves down. Nice move down. Here's your target right here, the 100 simple. Moves up. Red candle, yellow candle transitioning. Here's your trend cloud crossover. And then the candles turn green. Big move up. Big move up. So, if you wanted to just practice following the trend, that's what I would do. I would go all the way back and just follow. Yellow candle, red candle, hits the 200 moving average, bounces off of it. Bounces off of it again. Start getting yellow candles, transition candles here. Breaks above structure right here. Right, here's the break above structure. Big move up. Here's your momentum-based trend cloud signal, the first one right here. Huge move up. Huge move up. So you've got yourself an automated system here. Everything is automated already on TrendCloud as far as the production of signals and support and resistance levels. Okay, we can't see, we have to draw in the levels of imbalance ourselves. All right. The algorithm is not capable of drawing out levels of imbalance, but we can draw momentum-based signals and we can draw support and resistance levels automatically. Then you have to use your discretionary manual trading system, which is your hands and your brain, right? And take the trade. There we go. There we go. Pulling back below our level, trying to make that move on the 4-hour chart. Right, so we're taking a little bit of heat on the micro, keeps bouncing off of that area. No problem. We're using a drawdown on this trade. We're using a drawdown on this trade. Right, pulling back, maybe we get another shot at this. I don't think we will, though. I think this is going to take off any second now. So you just have to be patient. If you're in a trade, we're in a trade from last night. Okay, we're in this trade from last night. We had some nice opportunities to take the entry. What originally worked was this right here. This was this was inside. Okay, this is inside of the 4-hour trend cloud with a 1-hour demand zone. Right, where is it? Right here, 1-hour demand zone, 4-hour trend cloud, and it hit an ADR checkpoint. Right here, it hit an ADR checkpoint. And, at the time that it hit that area, we had momentum and that 1-hour trend against us. Let's get over to it. Oh boy, I lost it. Okay. Right here. So right here, we were kind of transitioning. We got that yellow transition candle. We were below the trend cloud. So we kind of said to ourselves, oh man, I don't know. I don't know. We had a lot of information against us at that moment in time. Okay. It did happen to work out, but we succeeded anyway. We waited until we had the right condition, because you can only trade what you see. You can't make a guess. In this case, it worked out, but you really cannot guess like that all the time. It's much better to use a trading system where you can line up your indicators. You can line up your indicators for trend, momentum, and cycles and wait for them to be in alignment. Then go to the next time frame. Trend, momentum, cycle. Make sure that is in alignment. Then you can take the trade. It's very simple. Just keep it I'm going to start explaining it to people that way so that it's a little bit more simple. I have to focus on my I've really got to focus on my beginner coursework, because some of you guys who have been here for a while or who have, gone through extensive training, you'll understand what I'm talking about. But for everyone who is beginning and just starting out, I think we're constantly talking over people's heads, and we've got to change that. Take a look at what's forming here. What do we see here? Right? What do we see here? Let's leave all that. We've got that little W pattern, right? See that? You'll see it looks like this. Do you see this pattern right here? There you go. That pattern right there. There's the pattern right there. And all I did was turn off the candles. So this pattern is super useful, very useful reversal pattern. And it's simple. It's a W, right? Let's put the candles back on there, and there you go. So your eye just has to get used to seeing that pattern and understanding that it's a reversal pattern. Okay, so up 120. We're kind of going back and forth. We're still hitting this this supply zone, and that's okay. Full contract. I don't think the full contract is going to come back to that opening range. I don't think it's going to come all the way back to that opening range down here. It might, we'll leave that on there. We'll leave that on there just in case it does come back. Because, again, just like Amazon, Google, Apple, the big large cap stocks, gold, people are investing in gold. Hey, what's going on, Graham? Good to see you, buddy. The watch pop up. The watch pop up. Notice didn't. The watch. Oh, the watch pop up. Oh, really? Oh, interesting. It didn't show up on from YouTube. Yeah. Yeah, because there's less people in the room. Something is amiss. Yeah, I noticed that. I noticed that. What the heck is going on? That's very interesting. That's very interesting. Yeah, that's probably why there's less people in the room. Um, I don't know. I don't know what's going on with that. I don't know what's going on with that. So the watch pop-up is not showing up on YouTube. I didn't change anything. Why wouldn't it? Why would it not show up? Huh. I'm going to have to figure that out. I'm going to have to figure that out. That might be on the StreamYard software. Oh, not just me. Oh, that's good. Thanks, Graham. That's good to know. Okay, so there's an issue. There's an issue on YouTube. There's an issue on YouTube then. Who do we write to about that? I'm sure they know about it, but I would really like to. We'll have to Google that. We'll have to Google notifications are not working on social media right now, because there's people from Facebook that aren't. Looks like they're not getting. I wonder if it's working on X or Facebook, but Google. Okay. So YouTube, it's not working. Good to know. Thanks, Graham. Trader TV Live is also down. Huh. All right. Well, at least I know it's not my fault. Jesus. Or anything that I'm not doing. All right, let's take a look at copper. Copper has gone through its opening range. And let's take a look. Why? Why would copper be, breaking below? Broke to the upside, broke to the downside. We don't like that. We don't like that. Why would copper be doing this? High time frame uptrend with downward momentum. Okay, there's one issue. You've got an uptrend cycling down, momentum down. Well, that's opposite to what we want. Middle time frame. We sort of have a downtrend. Now we've got a full downtrend, right? Downtrend, cycling up, momentum is down. So the majority of momentum across multiple time frames is down. And so, this is very accurate, guys. This is very accurate. If you've got the majority of momentum down, right? We've got it on the high time frame, it's down regardless of trend. If you're just looking at momentum, down on the high time frame, down on the middle time frame, right? Then look at the next one. Cycling down on the high time frame, cycling up on the middle time frame. Downtrend on the middle time frame, uptrend on the high time frame. A lot of mixed signals. But we have more pointing to the downside. And look what this thing did. It came up into this market edge and made a move down. Where's the ADR checkpoints? Real far away. We got a lot of room to run. That must mean that the Globex trap here, 62%. Yeah, we got plenty of room to run. Plenty of room to run. CPI missed by 1 basis point. Markets get scared, build big sell-off all around. Energy is up. Let's go over to crude oil. How's our trade doing here? Good. Good, working out. So this is like a gold investment, right? Where we just sort of invested in gold futures, and we're going to leave it alone. That's where you can make some serious money. But you got to learn how to use TrendCloud. You got to have a price action mapping system if you want to invest in futures. If you want to invest in futures, you need to have a price action mapping system. There we go. That's another blog title that needs to be written. Oops. Try keeping Wi-Fi. Oh. No, that's fine. Let's just turn that off. Oh, whatever. Micro crude oil. Crude oil is definitely not like gold, right? Crude oil is definitely more volatile, and you got to be real specific with it. But we've noticed that that gold and the metals market is a bit more manageable. It really is. It really is. Even the indexes, right? Like you can buy the S&P, right, Graham? You can buy the S&P, the SPY, the QQQ. You can invest in that. You don't need a stop loss. You can invest in that. But because futures works a little differently, you would really have to expect a certain amount of drawdown. You would just have to expect a certain amount of drawdown. But what's nice, unlike with stocks where you might need margin, futures, you don't need margin. Futures, the money is already leveraged. The money is already leveraged. And depending on your account size, to trade in the micros, it's pretty doable. So, what if you want to trade, in the micro NASDAQ and invest? What if we didn't want to really trade the micro NASDAQ? What if we wanted to invest in it? Who's contacting me? Notification, huh? Oh, someone's following me. Ron. All right, I'll follow you back. All right, Ron. All right, come on. Let's get out of here. Yeah, so what if we wanted to invest in, because I know, Graham, you like investing in the QQQ, triple Q. What if we wanted to do that on the futures? Money's already leveraged, right? Well, then I say, you got to use that high time frame. 1 hour, 1 hour chart, right? Here's the 1 hour chart. That sucker has gone down a lot. You know, so I mean, if you entered, let's say here, to go long, well, that's quite a drawdown. That's quite a large drawdown. You'd have to approach it like on the daily. If we entered here, look at what would happen if we entered the micro NASDAQ, you know, on the crossover here, right when this candle turned green, let's say right there, you know, we bought 4 micros. Let's use the risk manager tool. Oh, wait, get out of there. We don't want to do that. Risk manager tool, a little bit of lag here, a little bit of lag. Okay. Let's see. Right, we already would have hit 5 to 1. Whoops. Let's keep it right there. Two contracts, just 2 contracts of the micro. Let's just do one. All right, let's just do one. Oh, we can't. Do half. Let's see. There we go. One contract of the micro. Look at this. I mean, just look at this, guys. One contract of the micro. Okay, we're on the daily chart. $842 risk, right? So that's almost 5%, right? That's like a little more than 4% of a $20,000 account, right? $842, and you just stayed in this trade from November 9th. I mean, all the way till today. That's why, you know, and these contracts change, right? They change every couple of months. Yeah. Oh, yeah. Right. Okay. Doesn't allow futures or shorting limited to South Africa. Yeah. Gotcha. Yeah. No, that is a factor. That is a factor for sure. But investing in the triple Q, right? Investing in QQQ, go to that daily chart, look for that crossover right here, and you can continue to invest as it pulls into TrendCloud, right? We're early in the trend here. So if you went to QQQ, stocks, QQQ, where are you? Triple Q, Invesco. Huh, what is this? What is that symbol? Stock Crypto Oracle. That's interesting. Huh. Oh, wait. Do all. There we go. It's the same thing. Look at that. It's the same thing. Same thing. You think this works? Daily chart. Here's your crossover. This is the time to invest right here. Didn't work here, right? But it did work here. So it worked once, twice, 3 times, and then, one, anyway, you get the picture. All right. How we doing here? Kind of hanging out, right? I think this is going to be fine. I think this trade's going to work out just fine. 4-hour chart. Four-hour chart. Uptrend on crude oil. Wow, crude oil's almost $86 a barrel. It is $86 a barrel. Pulling back to 85. 5-minute opening range. All right. So now look what's going on. Crude oil breaking below the 50, cycling down. Momentum is down. 1-hour chart below the 50, cycling down. Momentum is down. And what did it do this morning? It broke to the upside. So it's too bad we weren't watching this, but we've got a lot of signals here to the downside, and it actually broke to the upside here. And what did it break up into? A little bull trap right here, right? All that downward momentum. And what do we have right here? We've got ourselves a bull trap. Starting to break down. What if we did the same thing? Crude oil, I guess crude oil is supposed to go up, right? So it'd be very dangerous to short crude oil. What does it look like on the 1-hour chart here? Let's recalculate. Crude oil on the 1-hour chart, very volatile here, but in general, it likes to go up, right? People are buying the dip. People are buying the dip on crude oil. I mean, look at this wildness. All of this is, right? People bought the dip here. Keep going lower. Where's the next? Maybe it's this area in here. Could be. People definitely like to buy the dip. So if we're going to invest in crude oil, especially on the micro, buy one here. right? Keep investing in crude oil on one small micro contract until it reverses. You have that option if you want to invest. It's kind of I'm going to write an article on manual trading versus the the difference in manual trading and automated trading. What a discretionary trader can learn from an automated trading system. Here we go, pulling back. All right, guys, very good. Good lesson. I will continue to edit those videos for you and put them out. I got another notification. Oh, what's new? What's new? Introducing time price opportunity chart. What the heck is that? We'll have to read about what that is. There's a new thing here on TradingView. Let's see if it's any good. All right, everybody. I will see you again tomorrow. Have a great day and take care, everyone. Great job. Take it easy, Graham. Later, Frank. Oh, what's that? Any thoughts on buying dividend dips? Yeah, Graham. I love dividend stocks, and if you are using whatever platform you're using, yeah, dividend stocks are great. And if you go into your software, whatever you're using, you should be able to see there should be something that you can click onto that says reinvest dividend. And that's awesome. That's great. That's great for long-term generational wealth. Keep reinvesting that dividend. A lot of the tech stocks don't have dividends, right? Because they make so much money in general because they go up so high. But if you have an opportunity to reinvest the dividend, I highly recommend it. Yeah, absolutely. Great question, Graham. All right, guys, I'm going to go get some breakfast. I will talk to everybody later. Take care.